Hello everyone, my name is David Varsimashvili. Are compliance regulations becoming so complex that they are killing the businesses? This compliance is no longer a side function. It's a core operational requirement. AML assessment is no longer just a regulatory requirement. It's a fundamental necessity to safeguard organizations from financial, legal, and reputational risks. Do sanctions work or not? The answer is both yes and no.
Hello, everyone, and welcome you to this webinar brought to you by the Soltesz Institute. My name is Viktoria Soltesz, and I'm the founder of the Institute, and we are fighting for an ethical and transparent payment and banking industry when everybody is understanding what are those confusing decisions, what the bank is enforcing on us, why certain transfers go through, why certain transfers get blocked, and overall how banks and payment providers think and how we can do business internationally, moving funds around in a safer, better, cheaper, and more effective way. Today, I brought a very interesting topic here, which is about how to start your fintech company. If you would like to start a fintech and you just want to know what are all of those issues, complexities, hiccups, obstacles on the way, I think this webinar is really for you, because I have with me here Julian, who started so many interesting companies at the past. So many of them were really, really successful. So I am having the right partner to pick his brain about how to start your fintech company. What are the most common problems when someone is starting a fintech company? We're going to talk about licensing, opportunities, all of those issues that one might face when starting a fintech company. So I think it's going to be a really, really exciting webinar. And as usual, we have some questions from the audience that we are going to discuss through this webinar. It gives a nice skeleton to the conversation. But I would like to encourage everyone, if you have any questions or comments, or you just want to share your ideas or experience with us, please do so, because we are always welcoming to hear your part of the story as well. This is the only way that we can build a transparent and ethical payment and banking industry together. So, Julian, please tell us a bit more about yourself. I already told so many good things about you, but it would be good to hear from you. How did you end up in fintech? What are those companies that you started? And who are you, Julian?
Thank you, Victoria. Thanks a lot. Yes, I think my journey from sales into the sort of payments industry started quite some time ago, where I was involved with people like Western Union Business Solutions on single transfers. And then I went into sort of the tougher markets around the iGaming industry, the card issuing and things like that. So I've embraced a lot of the different types of payments and successfully run a consultancy company, which helps people with their payments around the world, different jurisdictions, different types, different problems. I really enjoyed. My last venture was with an EMI out of Malta, which I was with them for 4 years. We actually then, from the licensing stage up to building it, etc. And I really enjoyed that. And this is where Alunify came along, which is the new entity now. From the ground up, we've built it from a conception idea of what we needed to do right the way through to actually, I think the news that you don't know is that we're actually due to go live now in the next 2 weeks. So we're actually at a very good stage at the moment. But that journey is what we're going to talk about now, and how that journey, what makes you want to start a fintech, and what the journey is through that fintech. But yet successfully built companies from zero up to multi-million pound companies as well. So interesting times.
I'm so happy to have you here, because then I can ask all of those questions that I always wanted to know as well. Of course, getting some questions from the audience too. So let's start. Let's jump in. How do you validate a fintech idea? How do you start? How do you even just get from idea to execution when we are talking about starting a new company? Just tell me all your experience and all of those knowledge that you have from having so many multiple companies in the past.
There's different ways, isn't it? I've heard of people like, I want to start a fintech because fintechs make money. There's some unicorn fintechs. I want to do this. What do you need to do to validate whether you want to grow a fintech and whether you want to build a fintech is you want to know what the problem is that you're trying to solve. So to be able to say, right, I can see this problem within the industry. This industry problem is happening everywhere. How do we fix that problem, and how do we actually make that problem go away, or make it a lot easier for people? So it's not just about the trend of I want to build a fintech and I want to earn loads of money. You need to speak to your target audience. You need to understand what the problem is, speak to the target audience and see what their pains are, and then validate that with real feedback and say, okay, let's say within the industry at the moment, there's a lot of people out there which are, let's call them fintech, EMI, payment institution, the banks, whichever. They're really good at certain things. So me to validate what I wanted to do is like, right, this is a really good solution to this problem. This is a good solution to this problem. This is a good solution to that. Now, there's lots of people that can fix this and can fix this and can fix this, but there's nobody doing it all. So for me, my validation on Alunify was literally the fact of like, I can see these problems. How can I fix them? I know how to fix them. Let's put them all into one. And then let's just add that sprinkling of real customer service and honesty. Because for me, one of the problems, and I'm sure you'd agree with me here, Viktoria, one of the biggest problems within this industry is the lack of honesty with it, the lack of transparency around it, and the fact that there's too many people go, yes, we can, yes, we can, yes, we can. And when it comes right down to it, it's, well, actually, no, we can't.
That's so true. But don't you think it's an overly saturated market? Because a normal average person would think that, all right, how hard is it? I just need a bank account. I need to send money abroad. I need to accept payment. I mean, what's the problem that we are solving here, right? What is so complicated? And what determines that I'm choosing the green bank or the red bank, or, what's the whole confusion behind it? There are financial regulations. My hands are tied, obviously, so I can only do so much. A bank is executing it. Where's the innovation? Where's that extra spunk which makes a fintech idea unique? And how do you resolve the problems when, you're under very strict regulations and your window is really limited?
Yeah. Again, as I mentioned, there's a lot of people doing the right thing, but they're doing the right things for, let's say, SEPA transactions. So if you're coming in, you're going to SEPA transactions, right? We want to connect to, like, you run an e-commerce store, and that e-commerce store is based around Europe. So your need is, I need faster payments, or fast payments. I need to know that the bank can handle the payments, or the payment institution can handle the payments and can safeguard my funds. And I also need to know that they're connected to SEPA some way or other. Then you have different markets. Let's talk about the high-risk markets as well. So let's talk about the iGaming industry. And actually, one of the things that we can talk about as well is the aviation industry. Because when you look at the regulations and things like this, the aviation industry is actually coming in on a high-risk industry, as well as iGaming. Now, for me, I think iGaming is a lot less risk than what the aviation industry is, because on the iGaming side, They're fully regulated. Again, aviation regulated as well, around ABTA and things like this. But when you're actually purchasing something from an iGaming company, whether it be a casino or sports betting, you're putting funds on, you're using those funds immediately, you're gaining or you're losing, and you can take the funds out. When you're actually in the aviation industry, you're paying for something that you're normally doing for 6 months, 12 months in advance. Now, let's look at Monarch, for instance. They went down with so much money, so much of people's money, that it was crazy. So it's about balancing the risk as well. Again, you're going to a bank. You need to know what you want from that bank or that payment institution. You also need to know whether that company is utilizing good correspondent banking behind it so that your money is safe with regards to that. And what's their risk appetite? Because it purely depends on what the risk appetite is. So I look at it for a Lunify side of it, and we're like, okay, we need to look at the high risk industries. We need to be able to support those high risk industries. We need to be able to add people onto the system quickly. So for us, it was all about the innovation of the onboarding process. It was about ensuring of having those people's needs, whether they're being cards, whether they're SEPA transactions, whether they're cross-border transactions, bringing the right partners in for those transactions as well. Whether they need connections directly to their ERP systems and things like that. So it's always about innovation. We already got a 3-year roadmap of what we're going to be doing in the future. So you have to really think about that and really look at what your target audience is. Yes, the market's saturated, but the market is saturated with people that aren't, in my opinion, that have got certain things right, but they've not got everything right. So what you want to do is, again, put all of the things right in one place and then make sure that it works.
Right. The second question is actually very interesting because it's all about the licensing. Shall you go for the e-money institution license, the payment institution license? Shall you go out of Europe and try to get the money service business license? Shall you get a crypto license? What kind of license? Or simply just test your ideas if they are working and maybe just join forces with an existing licensed financial institution and become a glorified reseller and try to give good customer service, better onboarding experience through the front end. Once while the licensed financial institution is at the back end, executing everything and taking responsibility for the transfers. What do you think? What are those main differences when someone is picking a license? Shall you just pick a license from the get-go, thinking that's going to be valid, or you just go stage by stage, start with small, and then as you grow, you get more strict, but obviously more expensive licenses as well? What's your experience with this?
It depends on how much control you want. So if you want to fully control the way that you're actually running the business and how you want to do the payments, how you want to connect on the payments, etc., then you'd go down the licensing route of your own license. If you, however, just are looking to go to market, make some money, be able to do payments, then, white label somebody else's. It's purely about what your specific needs are at that time and why you want the institution. There's many institutions out there that have got licenses that really just work for one company. You see it in certain markets, you see them actually having a financial institution within their organization. But that's not to go out and serve the public or serve the businesses. It's purely for their own business. Now, if you want to jump onto somebody's license, then you have to understand that your risk is fully on that other company that you're depending on. The risk of that company is what you're adding, what you're bringing to them, etc. But you're not in control of whether that license is going to stay there. Again, jurisdictional wise, you need to look at the jurisdictions that you want to work in and then be able to go for the license in that place. We've gone, for instance, for an FSA license purely because we're within the European Union, and that will allow us to passport out to the whole of the European Union. Now, at this very moment in time, we've gone for that license purely because we know that the mass market is within Europe. Now we should be looking at whether we're going to go for the MSB license within Canada, whether we're going to go for an FCA license in the UK, or whether we even go to sort of Dubai for, I think it's a DIC license in Dubai, whether we want to face Asia on that side as well. But you need to understand where your core audience is. Now, one of the factors here as well is when you've got the payment institution license and you've got the EMI license. There was a question on which one do you want to go for. It's how much money you want to put into it as well, and what it's going to give you. So the payment institution license, the PI license, you can still issue IBANs with it. You can still move money through it, etc., like that. Whereas the e-money license gives you a little bit more freedom. The time to market on both of these can vary depending upon jurisdictions as well. So, for instance, let's go for our own route ourselves. We applied for the license in September 23, and then we got the in-principle license within the 11 months, I think it was. So by August, we had the full license by November, and then we had a commencement or an authority to commence. So the time scale on that has taken around about 18 months, I think. The PI and the EMI license is around about the same. Again, depending on what you want to do. Are you looking at just doing fiat? Are you looking to integrate crypto into it? Whether you then integrate crypto, there's two different ways. You go for the VFA licenses, or you go for, let's say, an MSB license out of Canada, which includes virtual assets with it as well. The choice over PI and EMI, I think, is going to be slightly removed shortly anyway, because I'm pretty sure that is being integrated as a single license. But I can't, off the top of my head, can't think of when it's going to actually happen. I think it's due in around the PSD3 area sort of thing. So that's going to be one single license. But then you have to look at what your needs are. Are you going to need crypto? Are you going to need to hold crypto, let's say, as well, which is when you do need to actually go down that other licensing route. For us, it was a very simple journey of going for a PI license because we knew about the changes with regards to EMI and PI. So we wanted to get into the market. We'll go with a PI license. We wanted to have our own control over our payments and our destiny, let's say, really, as opposed to giving that control to somebody else.
Everything is changing so quickly. So what are the products and services that you're offering last year? It might be completely different than what you're planning for next year, right? So even in a couple of months, the market changes, the regulator is changing their requirement, the client needs are changing. How do you plan upfront for like 18 months to know that, okay, in about 2 years, I will need this license with this country, not to mention that the country changes on its own, right? Because at one point it was very popular to go to Lithuania or Estonia or all these Baltic states to get the license there. And now it's very complicated because the regulator is not as friendly as it used to be. But what happened, for example, Malta, I think it was 1.5, 2 years ago, Malta went on the gray list. Therefore, any financial providers or services which are coming from Malta was looked at with, raised eyebrows in the international banking system. So how do you plan upfront? What is going to be good for you in 2 years? Can you even plan that, or is just roll the dice and hope for the best?
No, I believe you can plan it. Whether you can actually execute it is another matter. But you can certainly plan. Like having that, you need an MVP. You need to have an understanding of what does the market need right now that I can bring to that market, and then you focus your MVP. You remember, you can only do an MVP once. Yeah. Everybody's like, oh yeah, but we could do this rollout. We could do this rollout. No, that's rollouts. An MVP is what you're going to the market with. What is your minimum proposition and how good is it to go into that market? So you have to make sure that is exactly right. Our journey of getting to our MVP has been like, we should add this. We should add this because of changes, because of exactly what you're saying. There's been so many changes and so many things going on. Right, I need to change this and we need to add this now. No. Put that in the roadmap, stick to your MVP. Then you look at the roadmap and go, okay, this hasn't changed, or these regulations have changed. So what do I need to do? Look at the MiCA regulations that came in this year. You know what I mean? It's like, okay, I'm going to go for an MSB license in Canada in month 6 after we go live, because we want to be able to hold USDT for our clients, et cetera, et cetera. Okay, 1 second. The MSB license out of Canada doesn't allow you to hold USDT because USDT is classed as securities within Canada, which means that you have to get a separate license for USDT. okay, I'll hold it. I'm going to have an MSP license, which allows me virtual assets, but I'm going to have a European entity that I can have that European entity to cover my USDT. So I'll work with an OTC desk or an exchange in Europe. Wait there. USDT now isn't covered on Mika. So like those plans that you had for that 6 months time is like, Jesus, where does that plan go? So you have to then look at how you can actually work those plans, how you can get those things into place. Focusing on that's still what we want to do, but now instead of it being like this big, okay, that 6 months may seem a bit more, 8 months, 12 months now. It's just the time of when it goes live. So you still have that project to do, and you can still monetize that project, and you still have an understanding that that's what people need. But the time to get there takes longer now.
So let's talk about money. How do you make money out of that with all of these changes and complexities? Obviously, we are no longer able to do stable coins in Europe. We need an extra investment, an extra time and effort and energy to get the relevant license. So how do you align these product features with monetization? Meaning, how do you know what makes money and how much money? And how do you actually even plan that in an ever-changing environment when your correspondent banking price list is changing on a minute basis?
This is such a good question, Victoria. And the reason it's a good question is that there were some changes done in Malta. End of last year, actually the changes came out on Boxing Day. So everybody's on holiday and they're just slid into the news and this is what's going to happen. And it essentially meant that certain fees that we were going to be charged would go up pretty much 10x. Regulatory and things like this. Now, you cannot put that or budget that or put that into a forecast. It just can't be done. So what you've got to look at is, are your pricing strategies correct? So then you have to look at your pricing structure, and you have to base your pricing structure on what your costs are, obviously, as well, but on what the market responds to as well. Every feature that you're putting in there has to drive revenue. Every feature that you put in there has to increase retention. And every feature that you go in there has to be an increase in your operational efficiency as well. So when you're investing the funds into this, there has to be some monetization around those funds, something that you have to be able to gain that money back because you're not always paying out. So you balance it. You have to do a competitor analysis without a doubt. Everybody is always scared of saying like, oh, we're looking at other people's prices. Of course you're looking at other people's prices. You wouldn't be a business if you didn't look at other people's prices. And what you have to say is, where am I? Am I giving so much more that I can charge more for it? Or do I have to be like a sheep and stick with the market? So me, I'm giving a much better customer service. I'm giving automation. I'm giving additional services. I'm giving cards. I'm going to potentially give crypto as well. I can afford to be more expensive than other people because I'm offering more and being that better person or that better company for them. So don't be afraid of charging more if you actually are going to give something better to them. Remember, you have hidden costs that will come in all the time, and you'll never be able to forecast those hidden costs. They just hit you like that from regulation. So you have to look and see what's happening. There's different areas now that are opening it up. There's the fact that you can join, let's say, there's people like Banking Circle and things like this, that they're one that they have everything there. You can join with them. But remember, you're going to be charged. You do it yourself and you have the connections yourself, you're going to get charged less. You go to them and you're going to get charged more. But there are other options out there. You've got to make sure that you have redundancy and you have that facility that you can switch and you can move. We have 3 cross-border partners to be able to ensure that we cover different types of businesses, different risk levels on those businesses. And on those, we have different pricing. Now, what we have to do then is blend those pricing and then make sure that the pricing actually matches in. So don't be afraid of charging for what you're worth. I think that's the key thing.
What do you think about this entry barrier? Because what I see is that when you're a startup, obviously you need to prove yourself to all your correspondent channels. You need to prove yourself to the market. I know what I'm doing. Look, my customer service is indeed right. Yes, I charge more, but have a trust in me. I'm safe, I'm secure, I'm going to give you a good service. So it's a huge thing to do anyway, because no one really knows you, no one really trusts you. So coming in with the larger prices, obviously that can repel the market. But don't you think that this massive entry barrier is the one which is forcing all of those startup fintech companies to add a little bit of hidden prices, a little couple of pips here on the foreign exchange, a bit of extra on the settlement fees that it wasn't not really clarified when you sign the pricing, and then once the client is in, the client will think that all the hassle and the energy and the time and effort to take my business somewhere else.
Yeah,
I leave it there, right?
You know exactly. Victoria, we have been through this conversation so many times. The issue with these hidden pricing. I mean, Jesus, how many times have we seen that these people offer the world? It comes to them. They sign up. They have a 3-month, 4-month, 5-month sign-up process. They're hitting it, and then all of a sudden, yes, it's like, well, wait there, you're telling me that you're charging me 50 pips on FX, and I'm working it out, and it's cheaper for me to go to the bank. And we all know that the banks are charging anywhere from like 1.2 to 3%, depending on the currencies. It's ridiculous pricing. But as you said, the key thing then is that they're there. They've spent all of that time onboarding. They've gone through the pain of whatever the system may be, and now the system's not doing what it promised. But are they going to go through another 6 months of trying to onboard with somebody else? There's a lack of transparency. I think if somebody wants to build something and they want to create something, be really transparent about it. Be honest with what you're giving to your clients. If you haven't got it, tell them you haven't got it. But then you have the journey then of, but we're going to get that, but that's coming in a month's time. That month's time I've seen rolling to like 3 years. So, we've both seen, you're going to have this. Okay, great. When are we going to have it? You're going to have it in November. Fantastic. Which November? It's like, it is, the barriers, there's different barriers you're talking about here as well. You've got the barriers of clients coming on board. And what stops the clients from coming on board? And is it going to be your high pricing? Is it going to be this? It can be. But if you're building something from zero and you're investing your time and your energy into it, and you're investing your money into it, or in some cases, other people's money into it as well, then you need to be able to get an ROI on that. Now, how do you do it? Do you go out there and go, these are our pricing, and the pricing's down here? Because people are going to look at you and go, okay, that pricing's really, really cheap. You can onboard for next to nothing and this and that. Yeah, let's go with them. But they're also going to be thinking in the back of their heads, well, wait there, how come nobody else is doing this sort of pricing? And how come nobody else is doing that? So you've got to hit a middle ground somewhere. If you're a brand new entity that nobody knows who you are, I'm very lucky. I've been through it. You know what I mean? We were chiseling on bits of slate when I first started in this industry. But with me, it's quite easy because I've always been a very open and honest person. I've always been the sort of person that's like, well, this is what you're going to get. And if there's a problem with it, me and my team are going to be very proactive in telling that problem at the beginning. It's not like we're trying to try and hide something. Let's be very proactive. Let's tell them, let's be there, and let's be very honest with them. And if you're doing that and you're showing them that you can give them this, you're showing them you can give them that, yes, you can put that pricing up. But it's a very tough thing, I think, when you're coming into a market that you're unknown in and the company's unknown. I was very lucky to the fact that we went live. We have no clients. We had no website, but our LinkedIn page had something like 650 followers of it. So it was a little bit different for us.
I think it's also this entry barriers that sometimes you're forced to do certain things. You are forced to even run on loss for a couple of years just to be able to get all those clients in. And then later on, you sneakily raise the prices year after year, and that's when you turn into profit making. We have seen so many fintech companies who are offering free services just to get the clients in. Clients get the habit of using their application, using their services, and then 5 years later,
it's difficult to move away. It's difficult to move away.
Exactly.
Yeah.
Plus, not to mention that when you're a financial company, you need to also balance out the portfolio. So maybe you have 80% of loss-making, low-risk clients, but this gives you the base to onboard the good-paying, higher-risk clients who are then will be able to, get onboarded on that. And that maybe balances out the prices as well. So what do you think? How would a fintech company go with it? Go with the low-risk clients, let them use the services for free, even lose money on them, and then serve the higher-risk clients with a higher profit, or run or loss-making for a couple of years, or raise the prices up from the beginning and say that we are premium and we are giving you the best service and the best opportunities. What do you think? What's the best way of going with this?
Again, it's dependent upon what they want to do. It depends on what markets you're going into. Where do you want to position yourself? Are you positioning yourself as a Primark, or are you positioning yourself as Ralph? Or are you positioning yourself as Louis Vuitton? You know what I mean? It depends where you're going to sit within the industry. Look at Revolut. Revolut had made zero, massive losses for years and years and years. It's not a model that I'm happy with myself, to be honest with you. But that's down to each individual person, each individual company, and it's down to their board and their shareholding, etc., etc. But you could go mass market. If you go mass market, it's the standard thing, whether it's banking or whether it's commerce or fast-moving goods, whatever. You essentially buy in loads and you sell at a low price, but mass market, sell loads out of it at a very small margin. It really does depend on how you go in. You're always going to lose money. At the beginning, you've got the startup costs, you've got the growth into it, you've got the licensing fees, etc., etc. Expect to lose money. But again, it's how quick you want to make that money back and how you want to be able to do that. So for us, want to go out there, I want to be a premium product. I want to make sure that that everything's correct and that we can earn money and that our clients are getting the best service. When you're balancing that as well, you're also balancing, can I afford to take on huge mass market right at the beginning, even at a low rate? Can my staff handle it? Can the systems handle it? Or do I want to do a nice smooth rollout with onboarding X amount every month and ensure that everything runs smoothly? Because if you're running at a loss and you're throwing loads of people onto the system as well, then the chances are that you're going to annoy them and you're going to essentially run a bad system for them as well.
Sure.
Which means that you're going to have a lot of drop off as well, and the retention's going to go down. Whereas, you need to sort of, if you go the other way, then at least you can actually onboard, at least you're giving them a better service, but then they're paying for that service.
Sure. Let's talk about technology. I think it's also a huge topic, which is a bit of a blur for a lot of people. Shall we build our own core system? Shall we use a white label? What are the pros? What are the cons? What are the benefits? What are the prices? What would you recommend in different stages? Is it based on how deep the shareholders' pocket is to actually develop something on your own with all the hiccups? What did you do? Why? And what's your recommendation?
Okay, it's some really interesting questions.
Hello everyone, my name is Viktoria Soltesz and I'm the founder of the Soltesz Institute. Startups fail, and if they fail, most probably they are failing because they don't have the thought out and proper channels for payments and banking.
Hello everyone, my name is David Varsimashvili Compliance is no longer a side function. It's a core operational requirement.
Hey, welcome everybody. I'm Marcia Klinget-Smith. Instant payments is transforming the way money moves all across the globe, across all the different industries.
It's like, but good questions. I mean, really good questions. So again, I'm going to go down a very open route with us. I'm not a tech company. If you want to be a tech company, be a tech company. There's a few companies that started as tech and then they went into banking or into payments. You need to define what you are. If you're a tech company, you should expect to throw millions at it. Because for you to build your own product and to get that product right and to ensure that it's going to be in the top of the game of what people want to see as well, that's a tough call. I never wanted to be a technology company. I'd like to do the sort of add-on parts of the technology. But if you want to go in, for us, we wanted to get to market. So you're looking at cost and you're looking at speed to market on your own tech side. The tech is going to take longer to do. So the ROI is going to take longer for you as well. Whereas if you white label and you're running down a core banking system that's already there, and there's quite a few out there at the moment that are very good on the core banking system. And if you find the right one, you can work with them, with their developers to redefine what they've built for you. So you have the core system and then you can say, well, actually, I wanted to do this. I wanted to do this. The time to market is a lot smaller. The cost is a lot cheaper because essentially you're buying an off-the-shelf box that you want to just add modules to. And that essentially means that you'll earn money quicker. What you don't have is an asset on the company, because that core system may be an SaaS system or a BaaS system, banking as a service or a software as a service, and you've not really had an asset that you've put money into that is there for the company to resell or for you when you decide to sell or whatever like this. However, you've also got risk involved as well. So the risk of, this is your product, you can host it, you're dealing with it. This is a SaaS software. This is a banking as a system software that is owned by somebody else, etc. What happens if they go bust? Realistically, when it goes down to the regulation side as well, you still need to look at it and you still need to say, well, wait there. Does the regulation mean that this is outsourcing? And what is my exit plan from this if something goes wrong? So you need to have your backup plans and everything in place as well. For most people that I know, to be honest with you, there's only a few that actually build their own tech. But for most people, they'll go down a white label route. A lot of them will just take the standard off the shelf and just run with that, which is a quicker way to market. But it also gives you a good connection with the core system then that you can actually gain from them and you can actually build with them. You know, who knows, in a few years' time, the company that is you're building the system with may decide that they want to sell, and you might be in a position that you can buy them, depending on the company and the money that you've made through the journey as well.
What a lovely, juicy conflict of interest it is to find out how your competition is running, right? When you buy the core technology, who is also supporting the competition with all of these software.
There's a lot of competition out there even with the core systems. I mean, if you walked around Money 2020 last week or this week, then you'll see core system. So
I agree. But what do you think later on? Do you even think about it worth to change from the white label setup to develop your own core system, maybe in 3 years, 5 years time, which is then, giving asset to the company, giving you a bit more grip? What would that transition look like to leave the core provider and do everything from scratch? Do you think it's worth the risk, or we're going to see when we get there?
I think there's always risk around changing systems, but if you've got the right team there that you have, because even if you don't have your own developers or anything else like that, you certainly need to have somebody that is tech savvy within the business. You need to have somebody on product, somebody on sort of the architectural side that really understands the product and really knows it. There's, again, a lot of companies start with, 1 or 2 developers, and then they if you choose the right core system that you can see can scale and you understand that scaling, then there's no need to do it because you know that that will scale with you. If you choose the wrong core system because of price, let's say, because obviously at a startup stage, everybody considers price as well. So if you're looking at it purely based on price, then you may not dig into how upscalable it is, what the features are, what their rollout features, how do they patch, what goes on in this system, who are they using for their hosting, etc. And you could go into a whole scale, like after 12 months, you're like so frustrated with it, you have to change your system. So there's needs that will push you to change the system, and there's needs that you'll be like, well, now we're actually at a stage where I think that we've got enough funding here, we've got enough collateral within the system that we need to build an asset in with it. So that's a potential way of looking at it. To me, I'd love to go down the route of that in 3, 4, 5 years time, we start looking at building our own core system. What we're doing is we're building modules that will actually work with the core system. So an easier way of doing it would be essentially look at a middleware and create that middleware that you then connect the core system to that middleware, and the middleware can allow any core system to connect to it. So that way then there's a less risk because everything's within your middleware and it just connects to these core banking systems and feeds the funds through. So that's another side of it.
Let's talk about risk a bit more. How do you evaluate your vendors? How do you vet the potential vendors? And it's not just technological, but since we are talking about, banking and financial products, your correspondent accounts, your safeguarding accounts, how do you know who to trust, who to avoid? Is it really who do you know in the industry, or you've got some unique way of evaluating all of those providers out there? How did you do it?
Yeah, realistically, it's trust. You utilize people that are essentially trustworthy. The systems have been used before. The banks, the correspondents that you're using are secure correspondents. We actually do run a questionnaire. We run a questionnaire on them. We also do vetting on them as well through like the LexisNexis and things like this as well, and essentially ensure that what we're looking at and what they're saying is true. Now you've got DORA that's come in as another regulation that you need to actually follow, and they need to have within their procedures and their policy, the DORA regulations for what's happening with any outsourcing that they're doing as well. So you have to follow that route. You can actually talk to other fintechs that are using them. These competitors aren't people that you shy away from. I speak to a lot of other EMIs in Malta and around the world that I have really, really good connections with them. And I'll speak to them. They're not going to give up their secret correspondent or something like that for you. But, they're willing to share information, and especially on the bad ones. So this is where the key thing is. It's being able to share. If one of my competitors, let's say, came to me and said, what do you think of this? And I'll be like, well, don't touch it because of this, this, and this, and this. But I'm happy to share. Whether others do or not, I don't know. But, get into the contracts, understand their SLAs, ensure that their SLAs are in place. And from those SLAs, ask them who they've used, who uses them. Ask who are your clients? Tell me who your clients are. Ask their clients whether they're check on their regulation side of it. If they're regulated, you need to ensure that go on to their regulator, check on their regulator. Are there any black marks against them with their regulator as well? Check on your regulator, see if there's any black marks on theirs. Security, ensure that their pen testing is being done on a yearly basis. See if they've got ISO 27001. These are really good things to actually have there in place. And never just choose one. You have to look at the market, look at different ones, see how they are. I think we had 5 verification companies that we went through before we chose the one that we had now. And that wasn't just on price. I mean, price makes a difference, but it's not just on price. You put price outside of it, because you choose the wrong one, it's going to cost you a hell of a lot more than what the most expensive one would have been. with us, I think we went down like, what's their roadmap? What have they got planned? Let's say at this moment, we're talking about like ID verification, things like that. Are they integrating AI into it? How are they dealing with AI bots that are coming in as these sort of fakes now? How does that work? And what is their core behind them that is differentiating them from others on their security side? You're talking payments, you're talking banking. You have to talk security. Have to talk security from day one.
And how do they vet you? How do banks and all these correspondent channels and intermediary accounts are choosing you? What is that you have to prove to them? And of course, it goes down to trust and whatnot. But what do banks look for before onboarding you, a fintech, as a client?
There's a few things. So essentially, knowledge of the industry, understanding of the industry. Again, if you've got history in the industry, then it helps. Your liquidity is a major thing for them. We're being asked constantly, have you got 12 months liquidity? Can you prove 12 months liquidity within the business? Who are your shareholdings? Are there any investors into the business? Well, who are those investors into the business? What is your policies? What are your procedures? Can you show us your last audit? This is a crazy question when you're actually just starting out, by the way. How do you actually audit a company that isn't working yet? So, some of them are a bit silly. But when it comes to that, then your reputation within the industry then actually helps. So, you go in with a brand new, fresh company that you don't have an audit, you don't have certain things in place, and then the proof has to be there. A lot of them will start like that, and then will very much sort of say, okay, as we're moving along and you're progressing within your licensing stage and things, then you can drip feed us the information as they go along. But don't expect to get anything from these people like within a week. We're going through at the moment with certain cards, and that journey is extremely linear. Nothing will happen in parallel. This has to be in place. If this isn't in place, we have to wait. Whereas other companies will work very much in parallel. So I've got some journeys that will take us 8 months. We've had some journeys that will take us 4 months. But expect, have a knowledge of who's behind the company, what's your regulatory status, and who's your supervisor. Show us your AML, CFT framework. Show us your transaction monitoring systems. Give us your volumes or your forecasts. Give us the business model clarity. So there's a lot. It's not just like sitting down with a bank and going, hey, want to join your bank? Yes, of course you can. Stamp you. No problem at all. Wouldn't that be nice? But then we'd all be out of business then, wouldn't we? So
exactly. Everybody would just start their own fintech company really quick, right?
Yeah, absolutely.
But the thing I hear all the time, and it's not just from you, it's really from the industry: reputation, trust, evaluating on completely subjective manner. That, like, even though that we are talking about such a highly regulated industry where everything has to be on the dot, the reporting has to be in place. Yeah. I can see that still a huge percentage of the decision is made on trust and reputation, as we said, and all of these subjective elements. What do you think about it? Is it contradicting? Is it how it should be? Is it going to change? Is it helping us? What do you think?
I think when you look at reputation, if somebody's got a bad reputation, they're not going to take you on. If there's some history behind it, then they're not going to do it. It's an addition, I think, to the needs of what the bank goes through anyway. So whatever they're asking for, the reputation side of it is always an addition to it. It doesn't just go by reputation. It doesn't just go by this. We've been dealing with some correspondent banks that I've known for ages and known for years and years. And they're pretty much like, well, we're going to onboard you anyway. It's this and this and this. However, I still need this. I still need this. My MLRO still has to jump on a call with theirs and go through the whole process of this. So it's not just like, I know him. There you go. It's done. It helps. It really helps. And this isn't just about the reputation of the, let's say, the owner or the CEO of the company or whichever. The correspondent banks know that I'm the founder of the company or one of the co-founders of the company. That's great. They understand it, and that's fine. And I do have an understanding with them. They've known me for so many times. However, it's also about the reputation of your board. They can look at you and they can go like, oh yeah, well, I know Julian, he's a great guy. I know that he can bring us business. I also know that there'll be no risk with the business he's bringing us, etc., etc. That's great. Oh, wait there. Look at his board. Oh, well, that person's had problems with this. This person's had problems with this person's had. So you need to ensure that your board is of the same reputable sort of guys as you. You need to have the right people. There's too many boards out there at the moment that are just breakfast boards. We see it time and time again that I'm going to earn 20 grand a year for like 3 2-hour sessions a year. Fantastic, wonderful, brilliant. I'm going to have croissants and breakfast and whatever there. You bring on a board that's going to give you value. My board is in pillars. So I've got somebody that is really based on financials, somebody that really understands legal and compliance, somebody that understands the sort of commercial side of it, somebody that's there as a checklist for sort of risk and things like that. So you bring these pillars in. When somebody looks at it, they're like, well, wait there, their board has got an understanding of finance, it's got an understanding of risk, it's got an understanding of commercial side of it, it's got an understanding of compliance and regulatory needs. This is a really good board. Now, that board's reputation compared with this person as well, that means that we know that there's no issue on that side of the company. They're not going to be in the Times of Malta next week or New York Times that something's going on, or they're not going to move money from Paraguay to Venezuela. But, you know what I mean? It adds addition. It doesn't take away what the actual onboarding process is.
Right. So it's basically the icing on the cake, but not the cake itself, right? So the reputation is add on.
I think that's exactly it. Yeah, absolutely.
All right.
Absolutely.
Good. All right. So the last question before we wrap up, and to be honest with you, I can talk about it for years because it's such an interesting topic. But the last question is asking about all the KPIs. So let's say that you started the fintech company, everything is done, you launch, you've got a good board, you've got a good correspondent partners, you've got the good technology. What are those KPIs which matter most after the post-launch, and how do they change over time?
I think one of the main things that matters most on KPIs is the burn rate. So it's essentially your burn rate versus your sort of runway. You know what your burn rate is. Your burn rate's always going to increase. So as you go live, the burn rate's going to go up because of the amount of transactions you have going through, which is what the banks will charge you on. Plus you'll have more staff, et cetera, et cetera. And then you have to balance that with your customer acquisition. And the customer acquisition, then you also have to balance that with the retention of those clients. To sort of have a sort of 10% retention loss over the sort of following 12 months is normal. Don't worry about losing clients. People are like, oh, we got to have all of these. No. You're going to have clients drop off. Don't worry about it. It's the companies are going to go bust. Companies are going to stop trading. Companies are going to use somebody else. I think one of the cool and good KPIs to actually really keep a focus on is how much revenue you're getting per year. So this client comes on to you. You have the associated costs with it, your onboarding fee and your monthly fees. Whatever they be, they should cover what the cost of the onboarding the client is and the cost of running all that client is during the year anyway. Remember, in fact, that your monthly fees will depend upon that type of risk of the client, how much work you need to do, what the reportings are, how much your staff costs are, etc., etc. So you need to break down these fees and say, right, how much is this costing me per client? Then, how much money am I making on that client? If that client isn't making the money, how do you get that client to make money? How can you upsell that client? And I think that's a really good KPI. And I think one of the most important is that revenue per client, because from that revenue per client, then you can actually utilize your BI tools and work ways of actually how to increase that revenue. When it comes to the banking side and your fees from the banks, then another good KPI is the sort of transaction volume and values of the transactions, depending on how you're being charged. But the transaction volumes, how much volumes have you got coming in? So where do your costs go? And this is quite important really when it comes to SEPA. So when you look at SEPA transactions, SEPA transactions aren't expensive transactions. However, the more volumes you get, you go into different tiers, and it's the same with everybody. You'll move into different tiers. So I'm not dropping secrets out here. But obviously, as the more volume goes up, then your tiers go down, but your costs don't. Your fees to your clients don't really go down unless you've built it into the model somewhere. So realistically, that means that your revenue is going up. So the more volume you get is going to be more beneficial for you when it comes to the actual costs that you're bringing in on board. And I think then the key thing after X amount of time is, how do you then reduce the churn of the clients? As I said, if you've got more than 10%, then you need to worry there's something wrong with your system. What do you need to do to change that? But if there's the other factors in it, could be that, okay, your pricing is high. Okay, so how do you change the client to use you more? What benefits can the client get from using your system? How can you work on that? How many drop-offs are there on your onboarding system? I've got 50 people that started their onboarding process, but we only had 5 that actually finished it. Why? Is it because your onboarding process is too long? Is it because you're not automated enough? Because these give you key indications of what you need to do within your system over that sort of roadmap. And you may have I've got this in the roadmap because I think everything's fantastic and wonderful and sunshine and rainbows. But actually it's not, because if you're going to take 6 months to onboard a client and that client journey is really poor, but because it's taking that long, it also means that the 50 clients that came to you and you're only onboarding 10% of them, then there's a major problem you got there. So you need to fix that problem before building something else. So I think burn rate and ensuring that burn rate and that the fees coming in are on track, looking at what you're doing, ensuring that on the staff, that the staff is organic growth. You don't just bring in a shitload of staff that you don't need, that are just going to sit there, twiddle their thumbs. You need to put them under a little bit of pressure as you're doing it. And as they're going under that pressure, then start bringing more in to sort of help ease that pressure for them. But ensuring that the other costs are kept at a good size to give you the biggest revenue from it. Revenue per user, definitely. Transactions, volumes, and then sort of the retention and user activation. Ensure that user activation is good, have a good journey to do it, and that the retention is not down to you, it's down to natural sort of revolving of clients leaving because of going bust or businesses closing or something like that.
Wow. So very interesting and very valuable information that we received today. So thank you so much. Is there something else that you feel that we should mention and we haven't mentioned? Is there something else that you want to share with us before we wrap up?
This journey is an amazing journey. It's a wonderful thing, building your own business and building it in this industry. Victoria, every single day changes and every payment method changes. How many times have you woken up and gone oh wait there, this isn't doing this anymore, but they've just brought this regulation now that's going to be doing this as well. And it's wow, man, how can you not enjoy an industry that has so much diversity, but it's just one simple thing? Don't be scared to jump into it.
So true. I think you can get your financial side of it, and then the creative part and your problem solving skills. So it's just inspires you from so many ways.
Thank you for really for bringing me into this. I mean, Victoria, what you've done with the Soltesz Institute and actually sharing this with the world, not just this, but every little thing that you do. I mean, why people should be on this. I mean, from day one, I'm sharing it with my team, saying look at what Victoria's doing there. If you want to learn about payments, you want to learn stuff, go and see that, because it's a key. What you've done is something that the industry's really needed. And you're very honest about it, which is even better.
Thank you so much. And we are carrying on this journey and the mission to make the payment and banking industry more transparent, ethical, and guide everyone who is interested in this to do things in the right way and make better and more informed decisions. So again, thank you so much for being here with us today.
Very welcome.
And I would like to encourage everyone to please share your ideas, your questions, your comments, because we want to know about it to be able to move forward here with our mission and create a community where users and providers can feel free to talk to each other and make this whole industry better for everyone. So thank you very much again. And thank you for everyone who was here with us today. And please share your comments and the questions as well.
Hey, welcome everybody. I'm Marcia Klinget-Smith. Instant payments is transforming the way money moves all across the globe, across all the different industries. A recent study showed that 42% of instant payment transactions actually happen on the evenings and weekends. About $200 billion is currently locked up in the European financial system today. And instant payments really can help unlock this liquidity. The future of finance is instant, and those who adapt will thrive.